Good morning, everyone. It's Ben Buckner with Ag Resource Company in Chicago. It's Tuesday, October 7th. We've got grain markets once again doing very little. Beans a little higher, corn and wheat unchanged. Dan Bossie is out helping the Irish grain industry with some conferences this week. But moving forward, I think we're going to start to think about this once again. So we've thrown a lot of things at the market, including unending tariff wars, a lot of different weather patterns in the central U.S. especially. A lot of yield estimates still on the table. Thinking about also regional frost that may have impacted the soy crop in the far northern plains. Still uncertainty over the details of yield in places like Indiana, Illinois, Ohio, even parts of Iowa. The gut slot of harvest is just ahead of us, so we do have some idea about the trend of yield, but I think that trend is still an unanswered question. We should be able to answer a lot of those questions, though, probably in the next 2 weeks, and we're probably going to harvest 2 or 4 billion bushels of corn, in the next 12, 14 days. So we're going to be aware of that. And in spite of the USDA report in October not being released, the November report also being in danger, we do have guidance on what yield's doing, and that includes, test plots, cash market performance. So we'll not be totally trading blind. Just stick with Ag Resource and we'll let you know exactly what markets are doing. But wanted to show this again for a second consecutive day. And thinking about the landscape of the market, and we were always on our way to having solved a lot of supply issues, that plagued the market between 2020 and 2022. What's next is this lengthy period where markets do very little. You can throw a lot at the markets. Perception over supply and demand doesn't change enough to give you new directions and value. And I think the thesis we've got here at Ag Resource is that landscape may have arrived. I think we're still focused very intently on managing risk. We have a little bit of a bearish lean as we get into the gut slot of harvest, and as China's very probably not going to buy a bushel of U.S. soybeans in the month of October. And we'll talk a little bit today about the window of opportunity for U.S. soybean exports thereafter. But just be ready for markets to do very little and a lack of directional movement. So that goes for both sides of the marketplace. I think we are more or less stuck until we've got the next big market changing event. And that probably comes down to Mother Nature and weather's performance in South America specifically. Today, we're thinking the announcement on the details of U.S. farmer aid is imminent. Today's been the day targeted for a long period of time. That is still the idea from a lot of connected sources. And so far, it looks like $10 or $15 billion, and that's not insightful. That's been in the news for a long time. But we think that it's logical to compare this to MFP payments during the last trade war. And so we think about those details. Probably doesn't mirror them exactly, but the crops most impacted will be the most intensely paid out. So soybeans most likely, sorghum to some extent. Probably all crops will have some kind of value attached to them, but soybeans will be the bulk of this. It's $1.50 plus per bushel. For better or worse, we want clients to be prepared for this, get the books in order. We should know more about that tonight or tomorrow morning. And also, for whatever it's worth, we're not getting an October report. Again, if we don't sort government funding out by the end of October, the November report could be in danger of not being published. But wanted to show this, trade guesses ahead of the October report. We're still going through this exercise just to sort of imply what market perception is today. So yield forecast from the trade, 185 bushels an acre on corn, 53.2 bushels an acre on soybeans. So that is very much aligned with a lot of the big private estimates we've seen from places like S&P Global, StoneX, even Ag Resource publishing corn by state yesterday. And the idea here again is yield loss, no doubt. Probably yield loss year over year in places like Iowa, Illinois, Indiana, Kentucky, other parts of the Mid-South, offset by improvement in yield in places like Wisconsin, Minnesota, and the Dakotas. 185 looks good to us. Really no change in the market perception of soybean yield from the USDA's report in September. Stocks on the bottom, trade guess 875 million bushels of wheat in stocks, 2.2 billion bushels of corn, and just 300 million bushels of soybeans. So the soybean balance sheet on paper, not terribly tight. We do think that there's a considerable amount of optimism about U.S.-Chinese trade built into the soybean balance sheet, but I do think pace analysis in corn does support USDA's current export forecast. So not a huge change in stocks when we do get that next report. That some of this will be fine-tuned because of carryover, but otherwise very few changes most likely. It's soybeans, though, I think. If we get the next report from the USDA in November and we have not sold a bushel of soybeans to China. And we've talked about this before, but just simple arithmetic pace analysis does pull U.S. soybean exports down to closer to 1.2, maybe 1.4 billion bushels. Will that be built into the USDA's November report, along with objective yield data? But this is what we're trading today. I think explains why markets are doing very little because, again, on paper, markets really not seeing much or any changes in U.S. supply and demand today. Whether that changes, function of yield, function of disappearance moving forward. We've also, again, kind of transitioning focus to supply and South America. And really, during this hiatus of government reports at Ag Resource, and once again, $1 get you all of this stuff for 30 days, focusing on big picture trends. So we're not going to get things like monthly corn use for ethanol, official crush meal production data, crop progress, objective yields. But in the meantime, I think we can step back and take a look at what is the general landscape in the world of agriculture. And so what we found is that, of course, this is not a secret, supply very, very large. Really, for the most part, we've avoided big picture weather threats, both hemispheres for the last 12 or 14 months. So that's something to consider. How do we clear inventories is another thing. Trade barriers are not helpful. We're also seeing in the grain markets a lot of competition for disappearance. We've talked about sorghum in the feed market, hard red wheat in the feed market, and a lot of South American corn still left to ship. But I think in the medium term, it will be all about South American weather and is there supply dislocation there? And so we've got another 24 hours where the forecast is still very consistent. The major forecasting models not in perfect agreement, but it does look like the arrival of the Brazilian wet season is imminent and fairly timely, maybe 10 days later than normal, but having got a lot of rain in September in places like far south and in Mato Grosso, Brazil, planting progress really right on track with average when we think about first crop corn and soybeans. But what you're seeing here now is the EU models 10-day South American forecast on the left. Major crop areas are highlighted. And on the right, you've got even the AI models, which have been kind of more reluctant to add this rain into northern Brazil, but finally are doing it starting October 11th or 12th. So this is enough rain to really stimulate planting in a lot of places. And I do think, the state of Mato Grosso probably will get to about 30% planted on soybeans by the end of this week. The state of Paraná will publish its crop progress details this morning, and soybean planting in Paraná may be upwards of 38 to 40% planted. That's faster than average. And so those crops too will have access to water. So everything looks pretty unremarkable in South America. And to that end, betting on actual widespread drought at tropical latitudes of Brazil. So like Mato Grosso do Sul, Mato Grosso, Goiás, those fringe producing areas in the Northeast. It's not impossible, but it is very rare. So we've just kind of gone back historically. This is what October to December 31st rainfall has been in Mato Grosso since 1995. And there have been a few hiccups, but for the most part, you are going to get 18 to 20 inches of rain or more. That is enough to produce pretty large soybean crops. So we just don't see a lot of variability in Brazilian soybean yields, especially when I think major supply loss in Brazil does have to come via drought in the south, where rainfall patterns are far less monsoonal in nature and everything looks good there today. They've got an abundance of water. So most likely, barring a major change in the South American climate forecast, and so far this is just USDA estimates, we look at the major crop yield and we combine all the biggest crops produced across the world, and it does look like we're going to cross this threshold of 4 tons per hectare in crop year 25-26, which is different. The last 8 or 9 years, we've really seen stagnation in global crop productivity, but we seem to have broken through that this year. And we start to revise estimates higher because of potential in Argentina, potential in Brazil, things we've already seen from the Argentine wheat crop, the Australian wheat crop, the Canadian wheat crop. So I do think that we are locked in something like 4.02 tons per hectare when we think about global productivity. So those are kind of the big picture themes. So again, I think we are stuck. Volatility is gone, and it's left to us to determine what's next in the market. And I do think what's next, big picture, risk management wise, is South American weather. So that's all for today. We'll be back tomorrow. All the best in the markets today, and we'll talk to you soon.